Hey, what's up, guys? So I want to make sure that I touch on the charts for this week. This is going to be a shortened week going into Thanksgiving, so I want to just take some time and break down everything that is going on in the charts, going on in the world, and we'll go ahead and get on this. So obviously this is dollar, but I'm going to start with Forex Factory because got to see what's going on. So if we look at the charts again, Monday. We could see there's not a ton of news. Again, this is going to be a shortened week, right? When we think about Thanksgiving being on Thursday, it's a federal holiday, and then usually Friday, is Black Friday. So, there's going to be, I mean, obviously the charts will be open and the markets will be open that day, but really, I mean, I'm not going to probably be trading that day again. You know, um, I think one of the best things that every trader can do is structure their trading like it's an actual job, right? And have set days that they're in the office, set days that they're out of the office, right? Because, we're going up against people on Wall Street that are doing the same exact thing. And I think when you make something a routine, it's a lot easier to come in and kind of like disconnect from the outcome and just follow your processes day in and day out. So, with that being said, I probably won't be trading past like Tuesday or Wednesday. We'll start to see the markets probably shut down early this week. I think Wednesday is when they usually shut down. Wednesday at noon maybe. So I could be wrong, but usually Wednesday will be my last trading day for the week. So I'm almost treating this like an NFP week or FOMC week. And if there's a good setup, cool, I'll take it. If there's not, then it's like it's not really worth it. Trying to force the buttons. Again, we're getting to the end of the year where volatility is not as high as it's typically or traditionally been throughout the earlier parts of the year. We are coming off the government shutdown, so I probably will be trading later on into the year than I usually do. There's probably going to be some volatility, for the rest of the year. So excited to kind of get back to news of structured news events and things. But anyway, so coming into Tuesday, we have CPI, right, and PPI. So this could potentially be a good high volatility day to trade. Um, and then tentatively PCI index on Wednesday, but uh there's not a ton of news this week. And then yeah, at 8:30, there's no news on Friday. So again, if I'm looking to trade again around days where there's going to be volatility, Tuesday looks like it's going to be the best day to trade. Again, there are 8:30 unemployment claims on Euro too, or on USD too. So a little bit of volatility Tuesday, a little bit of volatility on Wednesday. So maybe there potentially is a good setup around that time. So with that being said, let's go ahead and look at the charts again. So coming into last week, what I wanted to see on dollar, I told everybody, hey, like we did run this old high of buy side liquidity of last month's high, or actually August's high, July and August high, and we rejected from that level. We traded back down into this overall fair value gap, and I was like, okay, technically this is not a break in market structure, right? So you can see the arrows here. Oh, this is like multiple weeks of me trying to call this out, but we finally did see that rise and take out uh, the high of the month, which is that level right there. We are getting some wicks off of this high too. Now, in these scenarios, I have to continue to look for bullishness or look what the trend is going, even though we are getting some rejections here. So I'm gonna be very careful with this, right? And so ideally we trade back into this fair value gap here, right? You can see that busy. So I want to see the market continue to run higher, right? But we are getting wicks off of this. So again, it's all about being careful. It's all about being careful. And when you're at a level where you might consider this resistance, you might consider this a level of liquidity, right? The number one thing you got to ask yourself is there's really two options here. We're going to keep pushing through or we're going to reverse, right? A lot of these wicks let us know that potentially we could reverse, right? But if we go down to the 4 hour time frame, it's really just consolidation and chop. There are some strong wicks to the top side. We could even see something like this, where the market dips back down, clears out the liquidity right here, and then keeps going higher, right? So we don't really know for sure what the market's going to do, but this is not ideally in a best case scenario. I would love to see a clean power of three, treating this as a consolidation and then running higher, right? Clearing out the sell side that sits below here, maybe trading back into this gap a little bit more, and then taking things higher. That would be a best case scenario for me. I just would not want to long this right here, right? We're getting a lot of wicks to the top side, showing us that we're really working these highs, scooping the orders that potentially were sitting above this high. So I don't really want to go long until I get a clean power three setup. And maybe it looks something like you dip down here. Maybe you're buying, trying to find a good buy setup in this gap, or it comes back out to the high like this, pulls back to an area of liquidity, whether it be a fair value gap or these old highs or whatever, and then takes off again, right? So you're buying somewhere in there. I don't know. But ideally, I still have to maintain with the bullish idea. Now, if we invert this overall fair value gap like this fair value gap, and we start running lower through here, then this is probably my fail-safe level, right? And so again, my fail-safe level is just going to be the level, just going to mark that right there, that basically my idea falls apart, right? So I'm going to be bullish until we take out this high. I'm sorry, take out this low. So like looking for straight bullish setups, or if we get a convincing move, right? But this is the level where it's like, okay, my bias really needs to shift because I'm wrong, right? And you need to have that when you're trading, uh, because otherwise, sometimes people, and I know for me, I get tunnel visioned, right? So I look at, how this kid trade can win, and I stop looking at how it can fail. And so that's one of the things that I do, right? I just draw that line out and say, okay, cool. Like if we're down here, we're trading here, most likely we would have broken structure, and there's no reason to go higher. So that's dollar. So thinking bullish dollar. Again, I'm thinking bearish euro as a result of that. Now keep in mind, I believe this is gonna be is this gonna be the last week of the month? I believe this is gonna be the last week of the month. We're going into, well, no, because we have another, it'll end next week, next Sunday. Well, actually, no. Is there a 31st? Sorry, now I'm looking at, I gotta look at when the market ends or when the month ends. Yeah, I should know this. Does November have 31 days? It is 30 days. So technically Friday will be the last trading day of the month, right? Because next Sunday will be the 30th, right? So technically this is the last week of the month. Usually when we end the months, we are looking for a counter trend move in addition to what we've had, or in relation to what we've had. So if we've been bearish this entire month, then potentially we might be bullish. And I want to see. So we could see just a counter trend move. So what that would look like on Euro is potentially a bullish move. What that would look like on dollar, what I just showed, would potentially be a bearish move, I think. But let's see, is this November? Yeah, it's weird. As y'all can see, I'm doing this in real time. This is not like, oh, 12 months. I want one. Sorry. I'm also getting over a cold, so bear with me. Uh, so yeah, this has pretty much been a bearish month, so we might see us trade back into the range. So a bullish week, right? I'm not expecting too much from this week on any asset class. Again, holiday weeks, pretty much, you know, very bearish, or very down volatility weeks most of the time. So let's go ahead and look at, and I'm gonna get rid of this stuff. Let's look at uh let's look at the weekly time frame on Euro USD. And so basically we've been waking off of this. We've been trading into the side of this BISI right here, right? But we've been getting a couple of rejections from here. And again, I can't really like in a normal week, not a week that's not the end of the month, I would obviously want to see this go lower. And we still might get that, right? We are starting to get some wicks to the downside, but there's nothing here that says me long term or bullish, right? And so I called out this level here, the sell side level at 1.139. If there's a good opportunity here, then I'm going to take it for a bearish setup. But again, keeping in mind the fact that, this is the last week of the month, and usually what happens is the market tends to reverse and trade back into the range. So ideally, oops. So ideally here, what I want to see is the market trade away from this well, I guess I'll be on the lookout for both sides. So I will be looking for us to, maintain that counter trend week that we usually see towards the end of the month. But then also if we get a good bearish run, um, then maybe we could take out this low, which is the low of the month, right there. And so I try to reverse engineer my like counter trend weeks. So if I expect the market to be counter trend, again, we want to think in terms of power of three. So right, if we're going to be bearish for the week, we would think about this, right? We would think consolidation, manipulation, distribution. And if we were thinking about bullishness, right, it'd be consolidation, manipulation, either way, right? Um, Again, we have to pick up orders, the opposite liquidity before we go in that direction. And so ideally here, if we expect us to have a bullish week, right, which lines up with the last week of the month, which is usually counter trend. Uh, in this case, we've been bearish all month, so potentially a counter trend week to wrap things up. We would see bearishness early on, right? And so, from my perspective, since the overall market is still bearish, I don't really want to be taking any type of trades that are going against the overall market. So I'm really trying to find opportunities for bearishness, even in a bullish week, or even in a potential bullish week. So what this means for me is that on Sunday, that Sunday, Monday, Tuesday time frame, I'm probably going to be looking to get in on what could be the manipulation for the week, but still kind of lines up with the overall trend. I know it's kind of confusing to think about, but really, if you're expecting a counter trend week, the best opportunities probably will come at the beginning of that week. Um, that way you can take trades that line up with your overall bias and still kind of not worry about uh, that there. So again, I'll be looking at two levels. The 1.146 level right there. And then if we do see an extended run down here, that'd be awesome. I just don't see it happening with this week in the limited volatility that we have. But we very much are bearish here. I don't expect this to go higher. This could chop. I mean, the pullbacks have been really drastic. Like we were here, we ran all the way back up here, and then ran back down. So like the pullbacks have been nasty, but like it's still very much a bearish market. And so this is still where I'm looking long term at 1.139 to hit. If we go to GBP, just 6B1. Uh, we again, same scenario here. We're in a bearish market. We see that the market really, again, if you take a step back and look at this, I mean, it's very clear that the market is making lower lows and lower highs. We rejected from this overarching high fair value gap right there and are running lower. Again, in a perfect world, I would love to see this continue to run lower for the week. But again, keeping in mind last week of the month, holiday week, we could we could be setting ourselves up for a counter trend week. So again, this is my overarching target that I want to see the market hit long term, going into December, etc. This could potentially be a weekly target here. And for this week, again, if we're running with this counter trend bias or counter week bias for the last month of the calendar, we could see something like this, right? Or we could see something like, you know, could take this low and then run and trade back into the range, right? I guess what I'm saying is I'm not expecting a ton of volatility here, and I will still be looking for opportunities to short. It's just that the opportunities potentially might come earlier on in the week, and that kind of lines up with what we saw on the Forex factory when it came to GBP, right? Or I'm sorry, USD having that news on Tuesday, right? Which is pretty early in the week, right? So ideally, yeah, I'm still bearish. I still will be looking for bearish opportunities. I will not be looking to buy this. I don't think you should be looking for bullish opportunities. And again, obviously, this is not investment advice. It's just my own technical analysis. But you know, I'm not. This is trying to buy. This is crazy, right? We've been in a downtrend since September. Really, I mean, it really kicked off in July. So this is not really something that you want to buy. So I still will be looking for opportunities to short. It just will be looking earlier in the week. Let's look at, I mean, Australian dollar is pretty much the same thing. Australian dollar is actually worse, uh, or worse for bearishness. I guess it's a better bearish setup, I guess is what I'm trying to say. Um, this is pretty clearly the start of a higher time frame, weekly, monthly, uh, running of liquidity. So there's all of this, white space down here where there's probably orders sitting. So if you look at this fair value gap and all of this right here, so there's a ton of opportunity for this market to just kind of tank, especially over the next few months. So Australian dollar, I'm bearish. I'm not going to do a markup on this one though. New Zealand dollar probably looks the same. New Zealand dollar is very clean. New Zealand dollar actually is very clean. Um, again, the same level kind of outlined here in all of these. You can start to see the same thing over and over again. Uh, again, I'm looking here for the market to take this and run lower. So you see that sell side level at 0.501. Maybe we trade back up in this order block again. Maybe we get like one last hit here and then go something like that. Again, I'm not expecting too much movement this week because of the everything going on. Gold is in chop. I mean, you can see this. It's consolidating, right? Again, if you think about a wedge pattern, you see the market consolidating like this. Right, it's basically condensing, right? I kind of think about these as like a rubber band, like it's getting stretched thinner and thinner and thinner, and then, it's setting up for the next move. But this is just a form of extended consolidation. In this, I don't know what the market's gonna do, right? Ideally, it would still run bullish, but like we don't really know, right? This could fall out of the sky like this. It also could just shoot up to the moon like this, right? And so in this case, I don't really know. I'm not trying to guess. If you feel like you got to guess, then it's probably not the best trade for you. So gotta let the market show what it wants to do. So I'm not worried about that. So NQ, what's going on with NQ? Again, I've been looking at NQ more for uh, it's more bearish than it is right now, bullish. And obviously, we know long term assets are usually going to go up. But, and I was looking at a markup from one of my students, Hugo, who was in the chat. He dropped a markup for this, and I saw this. This is kind of maybe more for him. But he basically saw this trend line here and is like, okay, I want to see this run bullish. And I agree. I think long term this is going to go bullish. I think there's a lot of trend line liquidity here. The only thing you have to watch out for is we still technically are in a bearish market, right? Making lower lows, we're making lower highs, etc. So it's kind of hard to uh, it's sometimes it gets we sometimes we quickly over project, right? And so um the the thing he probably saw was the sweep of liquidity, this hour breaker structure, etc. But we're still in a bearish market. So I do think this is going to turn bullish at some point again. But again, when you're trying to time the market, you can't rush the market. And so I have to stick with a bearish idea. I need some higher time frame, 4 hour daily confirmation that the market wants to run up there, right? And I mean, it could be something as simple as inverting this fair value gap, right? So I'm literally going to put here, I need to see, need to invert before bullishness. Otherwise, I still got to stick with this bearish bias, right? And so there could be potentially some plays today and tomorrow on NASDAQ, or tomorrow and Tuesday and Wednesday on NASDAQ. But until, I mean, this fair value gap is so big and so like obvious that like I can't really go long on anything until it runs through this and inverts this. Now you might say, okay, well that's a lot of points that you're giving up to have a better confirmation. And for me, I would say that like if it fully inverts this, then that's a strong confirmation that we're at least going to run to that high there, which between there and there is 300 points. That could be potentially a good trade, right? So for me, it's not really about trying to get as much as possible or like as many trades as possible. It's really trying to find out how can I get the best confirmation for what I got, and then obviously matching that up with our continuation setup, right? So it's just confirmations or confirmations. So when I pull that trigger, I'm as confident as possible that we're doing the right thing. So that's NASDAQ. Let me look at ES. ES is kind of the same thing. Here again, I could see the market running both ways. And a lot of times I'll tell people this is a concept that I talk about every now and then. I used to talk about it more in the boot camps. I don't talk about it as much. We look at market equilibrium, right? So equilibrium of a price swing, market is divided into what's called premium and discount. And so when we talk about premium and discount, there is the market in a downtrend wants to get back to a premium level so it can sell off. When it's in a bullish area, it wants to get to a discount to offer cheaper pricing for people to get in, right? And so discount is going to be anything below 50%, premium is going to be anything above. And so the market ran back to a premium level. This is the hardest level to try and project what's going to happen next, like extremely hard, because it just as easily can run up here as it can go right back down, right? And so you need the market to give you a lot of confirmation, especially in the lower time frame, especially when the market opens up, that it's going to do what it says what you think it's going to do, right? Because this is truly anybody's game. It can do this or do that pretty easily. Um, so that's the first thing. The second thing is, I think if I go back to NASDAQ, it's probably like that too. Well, it's not quite there. So maybe that's a little bit of a tipping of a hat, right? That it's more bearish. There's less liquidity up here than there's on ES. Where it ran all the way up there. So it's just little things that I'm looking and noticing. Again, it could mean something, it might not. Here's a good example too. Um, what I'm talking about. This inverted this fair value gap. So YM inverted this. So this might lend more support to the idea that it's going to go up, right? So I don't really know, and that's okay. Um, If I knew everything, then dude, trust me, I would not be on YouTube making videos, right? I'd be somewhere ducked off, retired already. And that's okay. You have to admit what you don't know. And so there's a couple things I'll say that I'm gonna be looking for is how we react to this gap. Do we start trading back below this? Again, like if we come back and reclose underneath here, it's probably a strong sign for bearishness. If we come back into this range, tap it again, and start heading higher and start making higher highs, cool, then we're probably gonna start running higher again. So I just again there's certain levels that you're at, these equilibrium levels or these inversion levels, where you just gotta be careful and you gotta trade things right. And just not over trade and not over project what you think is gonna happen. And so just less thinking, more watching and evaluating and executing. So that's all I got. So again, in theory, I'm bullish on dollar, but I want to see how we react to these levels. Again, it is a counter trend week potentially, with it being the last week of the month, last trading week of the month. In addition to the holiday, this is not a really, whenever you have these weeks that are holiday weeks, that it could be last week of the month, right? NFP, FOMC, whatever, right? They're not going to be situations where you're going to go crazy on the leverage. You're not going to go crazy on the risk. Uh, and you just want to make sure that you have a really good confirmation, a set of confirmations before you enter into any positions. Because again, the worst thing to do is give money up before the end of the week, the end of the day, the end of the month, right? Like, because then you're gonna have to carry all that stuff emotionally with the next month. And so for me, I don't see any clean setups going into the setup, going into the this week. Then I'm just gonna call it a week and just be ready for next week. And I'm not really pressed about that. I'm currently taking a live my funded futures account. Um, Again, I went back to futures only because I still have the FTMO accounts there, and I'm still working on passing challenges for the other two. I'm still funded with the 200K, but I went back to futures because I wasn't really sure of everything because of the shutdown. So yeah, so I think one of the things that sorry, I was sneezing off cam. If you can't tell by my voice, I'm like very sick. Um, so uh, again, what I'm basically saying here is that like you got to be able to watch for both sides of the market. But again, this is not the time that you're going to be pouring on the leverage or pouring on, the charts. And so again, I'm going to show you real quickly the my funded future or the what is it called? The uh my Tradeify. Sorry, the Tradeify account for you. So that way we can talk a little bit about where I'm at with these challenges. But I took two trades this week, and I'll outline those two because that'll be the last thing that we talk about for this call. I know this is like dragging on today because again, I'm not feeling the best and had a pretty crazy weekend, but I wanted to make sure that I came on here at least did the charts this week. So I think I'm okay to share this. So when we talk about details, the you can see my screen here. I am working on this Tradeify straight to funded challenge. Basically, I'm sitting at about just under 5,000. It's like 5,934. I've taken really only 3 or 4 trades on this thing. Um, the first trade was for 1,700, the second one was for 1,500, and the third trade was for 1,600. And this has all pretty much been in the last week. So well, since 11/13. So it's been about 10 days on this. So I've been able to make about 5,000 the last 10 days. They have a cool, interesting kind of model where they basically give you a live funded account and they basically break up your payouts. So the first payout will be at 9,000. So when this market reaches 9,000, I'll officially be over the drawdown level plus 3,000. So I can take 3,000 away uh, and basically get a payout of 3,000. The next one will be a payout of 4,500, I think. And then the second payout or third payout after that will be like when the count's 3,000 up. So, and that'll be what basically where the count's stuck at for the next, for infinity is that like I can get a payout every $3,000. So it's kind of cool. It breaks things up and makes things smaller and makes the goals a little bit more attainable. Um, so again, I'm playing around with this. I've had about 3 trading days again so far. My consistency has been decent. Like my biggest day is about 1,800, which is about, you need about 5 minimum days. So I'm really shooting to not make any more than that. Um, and so when we talk about the actual trades themselves, I wonder if it shows my performance. It shows the trades, but it doesn't show. Yeah, it doesn't show maybe journal. Sorry, it's like my first time going on this site. So there we go. So 1.8, 1.5, 1.6. So again, if we look at these trades, I took one trade and this was on a short on YM. So I've taken I think like two YM trades. Yeah, and then the last one was a Euro futures trade. So we'll break those down. I did break down, I think the first one initially. So I'll break down the two that I took this past week. So if we go to YM, I think the first one was this Monday? Trade five. That's Monday. So go to YM. We'll go back to Monday. And again, I know a lot of people are still new to the whole like funding stuff, but for me, again, I tell people, man, this money's not real until I get paid out, right? So it's not like I got just $5,000 that I can just pull out at any time. I gotta hit these numbers and these consistency rules, and then I get paid. So don't be trying to hit me up for money because it's not real yet. It's just virtual until they grant my payout. Um, so let's look at this. So Thursday, this is Thursday. Let's go to Monday. But the ability to generate potentially 5 grand in a week is crazy, right? It is trading can be a life-changing vehicle if you let it. So Monday, YM. So I took one trade. Is this Sure I got the right trade because I feel like I thought I did a better job. Oh, this was a PM trade. Okay, I was like, what the heck? Okay, so I took a trade in PM session. Again, coming into the market, we had a bearish bias last week on Euro on YM and all the indices. We want to see price run lower. So there was this low that was set right there. And so coming out of the day, or coming into Asian session, we saw the market run lower. We also saw the market trade back into this range here. Oops, I saw session. There we go. So the market was basically coming into Monday. Okay, there we go. I was like, what the heck? Okay, so coming into Monday, um, coming into market here, we saw the market was in a bearish market. We took out the high of Asia overnight, traded up to our standard deviation level right there. And so coming into New York session at 9 o'clock, I was already pretty much expecting more bearishness. And so again, was able to take a trade. We jumped down to that 5 minute time frame. Had a really good setup after at the our 950 macro in this range here. I was able to short and take things to the low of the day, which was, yeah, I thought we were going to come down here. And I think we did take that out, which was the low of last week. That was my target. So I was able to hold on to that. So caught a really good short based on what was going on there. And so again, I hopped in somewhere around 950 to 1010, which is right around here in this range. Just very quick trade in and out and probably like 15, probably like in less than 30 minutes. So that was the first, probably was a little bit more than that. It was about an hour and some change of being in the trade. So really good setup here. Again, using the ideas that we teach. It talks about power of three, liquidity. If you're a student, you should be seeing this very clearly. But again, our New York continuation model works on every asset class. And it's just an easy way to read where the market's been and kind of rule out what the market wants to, would potentially do next. The next trade that was Euro futures that I took on Wednesday for 1.6. So uh, the trade was Wednesday. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6. 1.6 So Tuesday. So again, very easy read. Again, we ran the high of Asia, right? We were in a bearish market. You guys know that last week we wanted to see bearishness on euro. We came out, took out the high of the market. Boom, coming into our New York session at 7 o'clock, we could see the market wanted to trade back into this level here. Ran the buy side liquidity here, right? Took out the high that was right before 7 o'clock and traded back in this fair value gap here. My stops were above this high, and then it was pretty much smooth selling in and out. Again, I was trying not to over leverage on this. And the thing about these trades is that when you're trading with these Tradeify and these funding companies, again, they have consistency rules. So basically, you have to have a 20% consistency rule with this. And all that means is that none of your trades can be bigger than like 20% of the overall profit uh, that you are trying to withdraw. So like for me, if the profit target is 9,000, then I need to be able to um basically have a trade that's no bigger than 1,800. So a series of those trades over and over, right? And so it kind of limits the amount that you can make on this. It also limits the scaling. I would say like on each of these trades, I probably would have been able to make at least double if I wasn't worried about that. But it also kind of makes you, kind of calms you down and stops you from worrying, trying to get every last dollar out of a trade and over leverage and things like that. So it definitely has its pros and its cons. I'm not uh I'm not like terribly mad about the uh the the consistency rule. It gets me to really think smaller and really just focus on the actual execution. So anyway, so interested in the trade there, ran it down to the low of the day. Again, trade hit the low of the day. I think I was out whenever I was at 1,800 or 1,600 for the day. And again, called it a day. So those were the two trades that I took last week. Again, really looking for A plus setups, and I'm really looking for the best possible trades. If it's one trade a week, if it's two trades a week, cool. But I mean, when you start getting to the level where you can pull four figures out in one trade in a day, then it makes things 10 times easier, right? I mean, we're talking less than 10 days from here to here, right? And really, I mean, it was 6 days of trading, right? So we're talking about 5 grand in 6 days, right? When the setups are conditions. And this is not over leveraged, right? It's not, a lot of capital that was invested. Ideally, I want to be able to get to the point where I have uh five of these accounts with Tradeify pulling off these days, right? So then we're talking about not being up 5,000, but being up 25,000 in 3 days. So it's uh it's um it's a process, and making sure that you just do the right things over and over again, and make sure you focus on your executions, and not over leveraging, not overthinking. And so it really shows you the power of trading, especially the power of these funding companies, right? If you follow the rules and you get with a company that actually knows what they're doing, I mean, this is like this being able to generate, or even just 5 grand, right, in a few days is, I mean, this is potentially life-changing money. I mean, in 3 days is basically able to make what the average American salary is, right? And so, um, yeah, so I mean, there's a lot here. And so, take advantage of these funding companies. I'm not advocating for any particular one. Find one that works for you, right? This is a cheap way to potentially make, a lot. And so this model is broken right now. I'm sure there's going to be a lot of changes and regulations to happen over the next few years, but take advantage of this right now. So, but anyway, it's a pretty good trade. Average trade is 1,600. Current day win streak is 300%. Um, and so yeah, let's get to this 9,000. Take that 9,000 or that $3,000 payout, and then probably reinvest into more accounts and see if we can do this one more time and keep it going. So that's all I got for you guys. Hopefully you enjoyed this. Hopefully you got some value out of this. And yeah, hopefully everybody has a good trading week. And again, remember we're looking for A plus setups. So you can take your time, find the right setup, and yeah, go from there. Peace.